Good afternoon. Welcome to the annual Economic Forecast webinar, which is presented by the UNL Bureau of Business Research, which is part of the UNL College of Business Administration. My name is Eric Thompson. I'm Director of the Bureau of Business Research, and I'm also the lead author of the forecast report. The forecast report is a joint effort of the Bureau of Business Research and also the Nebraska Business Forecast Council, which is a group of economists with universities in the state government, as well as Nebraska utilities. You actually can see the names of the Nebraska Forecast Council members on your screen, kind of in the center, upper center window on your screen. This report actually was released early this morning by the University of Nebraska, and you can download a copy by going to the Bureau's website, which is www.bbr.unl.edu. We're hoping that the webinar will give you some additional insights about the forecast, the reason behind the forecast we're making, and give you a richer understanding of why we got the results that we did. We have a box open on your screen where you can type in questions as they occur to you. However, I won't answer any questions until the end of the webinar presentation, which will take about 15 to 20 minutes, and then we'll have a period to go over your questions. Also, at any time, you can type in a question to our chat window, which is over on the right of your screen. And we actually have Professor David Rosenbaum, who's a member of the Department of Economics and also Associate Director of the Bureau, and he'll be answering your questions in the chat window. And of course, the members of the participants in the webinar can chat amongst themselves. We're also going to be having several polls during the webinar to get your input and opinions about the Nebraska economy, and we'll report those. Poll information will kind of update as each one of you votes. So the first poll is already up there, and go ahead and fill out your answer after you've had a moment to think about it. Last thing I'd say, if you called in on the phone, please press *6 to mute the phone, at least until we're through the webinar presentation. You may want to ask a question during the question and answer period, but until then, please mute your phone. Well, let me go ahead then and get started with the forecast presentation. Well, any forecast of the Nebraska economy is predicated on a forecast for the national economy. Nebraska, of course, has a unique economic structure, focus on agriculture, insurance, transportation. That said, by and large, the Nebraska economy tends to roughly follow the national business cycle. So to get an accurate forecast in Nebraska, you have to start with a good forecast of what's likely to happen in the national economy. So what I'd like to talk about is some of the positives and headwinds facing the Nebraska economy, and then give you our forecast for the next 3 years, both for the Nebraska economy and before that for the U.S. economy. You can see our poll question deals with your opinions about the U.S. economy. So what's going right in the U.S. economy right now? Well, I think the good news, and this has been true I think the last few years, is we now finally have a self-sustaining economic recovery where the economy is driving its own growth and not overly reliant on government stimulus for growth. The reason for that is we've had a couple of years now of solid private sector job growth. In the last year, we've even had growth in real wages, real growth in the standard of living. And with job growth and real wage growth, of course, that's supportive of growth in consumer spending, as well as consumer spending on housing. So it's supporting the housing activity and construction in the housing sector, as well as the consumer sector. So that allows businesses, which are focused on the consumer, to also make investments in their own businesses. So we have private sector business investment, consumer spending, the housing sector all growing in a self-sustaining way. That's a positive for the U.S. economy. Of course, more recently,
has joined the conference.
More recently, we've had a sharp drop in oil prices, and that's had a big positive impact on the economy. Now, Obviously, in parts of the United States, whether it's Texas, Oklahoma, North Dakota, that's been a negative. But if you look at the country as a whole, it's a positive due to the contributions to consumer spending. Of course, there's some headwinds that the economy is facing as well. Chief among those is real weakness out there in the rest of the global economy. Many of our international trading partners are growing slowly. Because of that, the value of the dollar has been rising. Both those things are obviously a negative. Are obviously a negative in terms of export activity for the U.S. economy. A particular concern is the Chinese economy. China has had a lot of economic growth over the last few decades. A lot of that has been good, durable economic growth. Unfortunately, part of it has also been due to government-directed overinvestment in infrastructure, in housing development. That now has to come to an end, and because of that, China's economy is entering a real tough period right now. It's going to need probably several years to adjust, and it's going to be a drag on global growth for the next few years. Another ongoing problem that we're facing in the U.S., and we've seen this coming for several decades, is the aging of our workforce. So with the baby boom generation already starting to enter retirement, it's hard to get rapid growth in our labor force in the country, and that, of course, slows the overall growth of the U.S. economy as well. So with those tailwinds and headwinds in mind, let's talk about the overall outlook for the U.S. economy over the next few years. And I'd like to start by looking at the poll question results. So you can see almost half of you expected moderate growth between 2 and 3% in the U.S. economy over the next few years or the next year. About an equal percent probably grow slowly, and there's a few that are even concerned about recession, that some of this weakness overseas can actually cause the economy to tip into recession. In terms of our forecast, we were with those of you expecting moderate economic growth in the range of 2 to 3%. Because of the struggles in China, I think it will be especially difficult next year. We have a somewhat slower growth forecast of 2.3% GDP growth for the U.S. economy for next year, 2016, but that should improve in 2017 and 18 up to about 2.7%. So the background for the Nebraska economic forecast is moderate economic growth in the U.S. economy. So what are we expecting for Nebraska? Well, we expect that Nebraska's economy will grow a little bit slower than the national economy. There's a few reasons for that. First of all, obviously the agriculture sector is a big part of the Nebraska economy. It's been a big contributor to economic growth in Nebraska. Maybe not last year, but if you look most of the last 5 years, it's really helped our state's economy. However, we're going into a period where there will be slow growth in Nebraska's farm sector, and that's not going to be able to be a big contributor. In fact, a small drag on growth in the Nebraska economy over the next few years. Another factor is our population growth. So Nebraska has good, steady population growth every year. However, it is a little slower than the national rate of population growth, about 2/3 as large as national population growth. And with that being the case, our labor force grows a little more slowly, and therefore our employment and GDP grows a little more slowly than the nation. So that's another factor. Lastly, Nebraska's largely bounced back from the Great Recession of 2007 to 2009. You can't really say that about all parts of the country. If you look at California, Nevada, Arizona, some of the East Coast states, they still have some bounce back left in their economy. So that's another reason why the national economy will grow a little faster than Nebraska's. We've already completed our recovery. So what are we specifically expecting? We're expecting job growth between 1.2 and 1.3% per year here in Nebraska. In terms of the number of jobs, that means job growth of about 12,000 jobs per year. So that's going to be a significant positive for our state and for new people entering the workforce, people seeking to re-enter the workforce. The jobs they need are going to be available by and large. As you can see, however, this job growth rate is a little bit slower than the expected national job growth rate, especially in 2016. Again, there's parts of the country that still need to complete their post-recession recovery. But even in the long run, all the way out in 2018, our growth will probably be a bit slower than the country's, and again, that's due to our slower population growth rate. Okay, another way to look at the Nebraska Economic Forecast is to look at the key sectors of the Nebraska economy: agriculture, manufacturing, transportation, healthcare, and other services. So let's take a quick look at our outlook for those sectors. Let's start with farming. So I thought it was important, before looking at the specifics of our farm forecast, to look at a long-term graph of farm income. And you see two things. Obviously, the year-to-year farm income varies quite a bit. But I think you see two general trends. The first one, which we're all familiar with, is obviously farm income has fallen from the peaks it hit in 2011 and 2013. So there were quite high prices for crops in those years, and as crop prices have normalized over the last few years, farm income has had to come down from those peak levels. However, on a more positive note, if you compare farm income in Nebraska the last few years and during our forecast with what farm income looked like 10 or 15 years ago, you can see that there's an upward trend in Nebraska farm income. So this is a growing sector for our economy. In many ways, it's a high technology sector. It has a real future if you think about the global economy and the growing global middle class. So all of these things suggest that the farm sector will be an important engine of growth in the Nebraska economy in the future. Now let's look at the outlook for just the next few years. You can see here that we are expecting a bit of a dip in farm income next year in 2016. The reason for that is prices for livestock, in particular cattle. Those prices peaked in the middle of 2015 and have now started to come down. Obviously, those prices are going to have a big effect on the income of ranchers in the state or farmers who also raise livestock. And so if you compare all of 2016, we're going to be in this lower price regime, and compared to 2015, there's going to be a drop in income for people raising livestock. So that's the reason why we're expecting another drop in farm income in 2016. However, at that point, we will have normalized prices, and starting in 2017, 2018, farm income can start to grow again, not necessarily because of a surge in prices, but just due to farmers managing their businesses, increasing productivity, working to lower their costs, and will be returned to steady state progress in Nebraska's farm economy in just another year. Another key sector is manufacturing. Now, as many of you know, manufacturing is a sector with a very rapid growth in productivity. So even as the sector expands, produces, and sells more, you don't necessarily get a lot of job growth. But as you can see, we are expecting some job growth in Nebraska's farm sector over the next few years, between 0.5 and 0.7% per year, which is about 500 to 700 net new manufacturing jobs each year. Now, the growth expectation is a little slower for 2016. The reason for that is the farm income issue I was just talking about. Obviously, if farm incomes are falling, we're going to have...
Has left the conference.
If farm incomes are falling, there's going to be less demand for agricultural implements, things of that nature. Nebraska is a big producer of farm implements, of other farm equipment and machinery. And because of that softness in farm income, both in Nebraska and around the Midwest, there's going to be a little pressure on the manufacturing sector next year. However, if you look at other parts of Nebraska manufacturing, especially our meat processing sector, we're expecting good growth in that over the next 3 years. And the net effect then will be positive growth in Nebraska migration. Now, growth in Nebraska manufacturing might be even stronger if it weren't for some problems the industry is facing now in terms of labor shortages. So on this chart, I'm showing you some information we've recently put together through the surveys we've been involved with of Nebraska businesses. In particular, the Bureau of Business Research, working with the Nebraska Department of Economic Development, Nebraska Department of Labor, has conducted surveys of businesses in the Omaha, Lincoln, and Scottsbluff-Gering areas. And the results from the Lincoln survey are now complete. And what you're seeing here is the responses of businesses in regards to which occupations it was most difficult to hire workers for. I'm going to focus on those occupations where it was most difficult to hire. What you can see is that list is dominated by occupations of workers that are critical for the manufacturing industry. Production workers were on the list. Those are the workers on the factory floor. On top of the list was installation, maintenance, and repair workers. Those are workers that install and maintain machines. That's obviously very important in the construction industry, but it's also quite important in the manufacturing industry to keep those automated factory floors running smoothly. So the manufacturing sector, we are expecting some growth. Could probably even grow faster if we could find a way to produce more workers with these manufacturing skills of production workers, installation, maintenance, and repair workers. Another sector where there's some issues with labor shortages is the transportation sector. It's always difficult to expand the trucking workforce as well. However, despite this, we do expect that transportation employment will grow pretty solidly over the next few years. The Nebraska trucking sector serves the Nebraska economy, but more importantly, it serves the national economy. And as the national economy expands, we expect to see good growth in the transportation sector, reaching about 2% per year. It'll be a big positive for moderate wage jobs here in Nebraska going forward. The last sector I wanted to talk about is the service sector. Now, this is the largest part of the Nebraska economy. It includes healthcare, it includes business services, accountants, software programmers, architects and engineers, people in any line of business where they primarily provide services to other businesses, typically a fast-growing part of the economy. Services also includes the hospitality businesses, restaurants, hotels, entertainment venues. Such a large sector, in fact, it includes about 39% of all Nebraska jobs. As you can see, we're expecting solid growth in the services economy over the next few years. Now, part of that is due to healthcare. Annual growth in healthcare employment is very reliable. Certainly will be in the future as our population continues to age. But the real reason for the stronger growth in the services sector is actually we're expecting quite strong growth in the hospitality industry over the next few years. Remember earlier in the webinar we talked about strong growth, or at least solid growth in consumer spending around the country. There's also been a sharp drop in oil prices. That means more travel and tourism. There's been big increases, for example, in the traffic on Interstate 80 this year. And so with consumer spending and tourism activity rising, we're expecting solid employment growth in restaurants, in hotels, and other elements of the hospitality industry in Nebraska over the next few years. And that effect will be good solid growth between 1.6 and 1.7% in services employment. That's about 6,000 jobs per year just from this one sector. So why are we expecting moderate, solid growth from Nebraska's economy in terms of employment over the next few years? It's because we're expecting a pretty good situation in each of our key industries. Now, as I said from the beginning, one factor that's been holding back growth in the Nebraska economy a little bit is our population growth. So let's talk about that in a little bit more detail here to wrap up the webinar. You can see we're expecting population growth of only about 0.6 to 0.7% over the next 3 years. At the same time, we're expecting personal income to grow at about 4%. So we're expecting real income growth of about 2% above inflation, population growth of about 0.6%. So that suggests that real per capita income, the standard of living in Nebraska, should rise by about 1.5% per year over the forecast forecast period, which is good, solid growth. Now let's look more at that issue of population growth. In fact, I see some of you have already started to answer our poll. Do you think there'll be an increase or decrease, or do you think it'll be positive or negative migration into Nebraska in the next year? And we'll look at that in more detail in a moment. Before we do that, though, let's look at the components of population growth. The tendency, when you think about population growth, to focus on migration. It's important to remember that most population growth in Nebraska occurs due to natural population growth, the difference between births and deaths. Now, Nebraska sometimes has a reputation as being an older state, and that might be true in some parts of the state, but if you look at Nebraska's metropolitan areas, Omaha, Lincoln, the average age is actually below the national average. A lot of young families. Nebraska is a great state to raise a family, given our quality of life, given the convenience of life, given our good education system, and therefore there's a lot of younger families and good natural population growth in our state. However, the other two components are domestic migration, the number of people coming to Nebraska from other states each year, less people out migrating to other states, and then international migration. Increasingly in recent years, Nebraska has been receiving a larger share of international migration. So let's go ahead and look at our population forecast, which will reflect growth in each one of these components. And before we do that, let's look at the results of the poll. So over the next year, about 2/3 of you expected us to have positive migration, with about 1/3 expecting no change. Well, the truth kind of lies in between those two expectations. You can see here that we're expecting positive net migration overall due to net international migration, about 4,500 people per year over the next 3 years. However, it'll be negative migration if you focus on state-to-state migration within the U.S. The bottom line, if you put both types of migration together, is Nebraska should get about 2,000 people per year due to migration, but most of our population growth, about 10,000 people per year, will be due to natural population growth. Well then, those were the main points I wanted to make with the webinar here today. I hope you have a more thorough understanding of our forecast and the reasons we expect the Nebraska economy to be growing at a solid, reliable rate over the next few years. Now I'd like to turn to the part of the webinar where I answer your questions. Also, if someone wanted to chime in and make a comment or a point, that would be fine too at this point. So whether you're on the phone or you're listening over the webinar, feel free to also chime in and make a comment. But in the meantime, I'll go ahead and start answering some of the questions people sent in. The first question is, why will growth in the Nebraska ag sector be slower over the next few years? I think the reason for that is largely due to prices. So crop prices, prices for livestock, we're expecting them to stabilize over the next few years. They've fallen quite precipitously. If you look at 2014, 2015, we're expecting that fall to stop. That's the good news, but we're not expecting there to be much upward pressure on prices. And if prices aren't rising, that's going to put some limit on the growth in farm incomes in Nebraska agriculture. So actually, I think the key to faster price growth is faster growth in the international economy, particularly in China. And that may be a few years off because, as I indicated earlier, China really has some issues to work through in its economy. And it may be a few years before the Chinese economy starts to accelerate again. And that should really drive up the cost of the prices for all commodities, including agricultural products. Another question that we received is, what effect will some of the recently announced corporate news have on the Nebraska economy? So, for example, there was a recent announcement regarding a large Omaha area employer, ConAgra, with some of their headquarters functions leaving the state. Another major employer in the state, Cabela's, there's been some recent news in terms of the ownership of that company, and it's got people wondering whether there might be some changes there as well. Those are obviously significant events for the Nebraska economy. However, even two large employers in our diversified economy can't derail an underlying trend towards economic growth. So those are definitely negatives, but I think they're unlikely to cause a reversal in the Nebraska economy. We probably would have grown faster if it wasn't for the news about ConAgra, but it won't prevent us from growing. Do you have any questions that anyone? Oh, okay. Will this presentation be available in the future? Yes, we're planning to, we're actually taping the webinar and including your questions and responses. We're gonna get that ready and send it out to all of you for your use, whether it's in class as the questioner asked about or for other purposes. And of course, the webinar will be repeated periodically as we release more economic forecasts. You can follow the Bureau of Business Research on a variety of social media sites. We're releasing at least 2 reports each month about the Nebraska economy. Further, if you'd like to be on our email list and you're not already, feel free to send us an email at bbr@unl.edu, and we'll give us your email address, and we'll add you to the email list so you can receive our reports. The next webinar will take place on February 5th. That's a Friday, February 5th. We'll be talking about the Bureau's newly completed survey of Nebraska consumer confidence, and we'll be doing our first release on consumer confidence in Nebraska on that day. So we'll kind of explain to you how the index of consumer confidence works and tell you what we've found about the state economy there. So not hearing any other questions, I think we'll go ahead and end the webinar. Thank you for participating, and we'll be sure to let you know about remind you about the February 5th webinar, and of course let you know about any other webinars we might be having or will be having over the next year. Thank you.